future is well designed. And I would like to have you consider some thoughts with me that help me to really change my future by giving it some thought and some consideration. And here it is. In setting goals, it's very simple. Number one, decide what you want. You just take a little time. You sit down and say, what do I want? What kind of skills do I want? What kind of income do I want for the future? What would I like? Where would I like to go? Places I'd like to visit. Habits I'd like to acquire. Skills I'd like to have. You just take a little time to think about what you want. Economics, friendships, people you'd like to meet, places you'd like to go. You just take some time. And then I suggest, when you've thought about what you want for the future, make a list. Just jot it all down. It's really a very simple process. And then here's number three. Keep all the old lists. I'm telling you, this served me so well, keeping my old list of goals. I look back now 10, 20 years ago at goals I set, lists I made, and I smile now because here's what I thought was so important, 20 years ago. Now some of those things aren't even on my list. I've got a new list. I've grown. I've changed. I've matured. But I give you that advice. Decide what you want. Number two, write it down. Number three, keep the old lists. And then here's number four. When you get something that's on one of these lists, check it off. Part of the fun of having a list is checking it off. And then if you can add some drama to checking it off, see, that's what really helps. I set a goal to go to Spain many, many years ago. And when I finally made my first trip to Spain, I had that journal with me that had that list in it. And while I had my journal on my lap, waiting for the wheels to touch down in Madrid, I waited until the wheels touched the runway, and I checked it off. Just adding a little drama. So, part of the fun of having a list is checking it off. Now, here's what's important about the lists and designing your future. If the future gets clear, the price gets easier. Because you got to remember, for every promise, there's a price to pay. Everybody's got to pay the price. Everybody's got to do the deal. Everybody's got to do the disciplines. Everybody has to pay. But here's what I've discovered. If the promise is clear and powerful, the price is easy to pay. The price is some classes. The price is a few books. The price is a few disciplines. The price is finding something that'll make your life better, make you grow, make you change, make you develop. So the first part of the key is to design the promise. Then, what is the price to pay? I'm telling you, the price will be easy. Anybody in my audience can pay it, no matter where you are, where you come from. Color doesn't matter, religion doesn't matter, where you grew up doesn't matter, circumstances don't matter. I'm telling you, if you'll make the promise of the future clear for yourself, the things you want, the places you want to go, the things you want to have, the person you want to become, the skills you want, the homes you want, the future you want, the friends you want, all of the values of life that you could possibly want. If you'll make that clear, make those lists, and be serious about it, I promise you it's an easy price to pay. Anybody can pay it. And the best advice I can give you is, if I can do it, you can do it. Farm boy from Idaho, raised in obscurity, I changed my life, turned it upside down, turned it all around, found economics, found future, found promise, and if I can do it, you can do it. So, start setting your goals and see if you can't get a better excitement going for the things you want to accomplish for the future. Now here's my third subject, and that's called financial independence. Oh, by the way, before I get to financial independence, let me cover one more point. One of the major reasons for setting goals is for what they make of you in achieving them. My teacher advised me when I first got started at age 25, he said, Jim, why don't you set a goal to become a millionaire? He said, it's got a nice ring to it, enough zeros to impress your accountant. And he said, I'm here to help you. You're only 25 years old. You've been to 1 year of college. You've got a beautiful family, every reason to do it. Why don't you set a goal to become a millionaire? And he said, here's why. And I thought, he doesn't need to teach me why. Wouldn't it be nice to have $1 million? He said, no, then you'll miss it. He said, here's why. For what it will make of you to achieve it. I'm telling you, that statement changed my life. Set the kind of goals that will make something of you to achieve them. He said, now, once you become a millionaire, what's important is not the money. I thought, that's kind of strange teaching. He said, honest, it isn't important. He said, you could just give the money away. Now, I did better than that. I lost it all. By the time I was 31, I was a millionaire. By the time I was 33, I was broke. And I'll tell you a little bit about that story later. But when I lost all my money, guess what? I found out Mr. Schoaf was right. What was valuable was not the money. What was valuable was what I became to earn the money. The skills I had, the knowledge I had about the marketplace, the values that I had going for me. They were more valuable than the money. And here's an important statement to remember. It's not what you get that makes you valuable. It's what you become. So part of the key here is to set the kind of goals that will make something of you. Don't set them too low so that you don't have to grow and you don't have to read and you don't have to try and you don't have to stretch. Don't set them too low. And then don't sell out. Don't go for something that's going to cost you your virtue or cost you your values or sell out your principles. There's a good middle road here to follow. Goals that will inspire, goals that will help you grow, change, develop, and become better than you are. Okay. However, make this careful note. Emotions are tricky. They can go either way on you. Emotions can build or destroy, weaken or strengthen, make or break. It all depends on how you use them. We call civilization the intelligent management of human emotion. That's it. The power, given an intelligent direction and objective, can accomplish spectacular things. The power, the feelings, those surges of heart and soul. What are they? What can they do? Well, here are some. Let me just quickly give you a list of 4 emotions that can change your life in one day. Emotions are powerful. Sometimes it doesn't take much to alter your whole life direction. Okay, here they are. Number 1, disgust. Powerful emotion. Disgust says, I have had it. See, that could be the day. The day you can say, I've had it. And whether you've had it with something small or something major, the day you can say, I've had it, may not be the day it ends, but the day it begins. That's what I said when that little Girl Scout left my door when I'm 25. I give her the big lie, she leaves, I say, I don't want to live like this anymore.
Yo, can you guys hear me okay? Loud and clear? Drop some 7s in the chat if you guys can hear me loud and clear. If the music's a little loud, let me know too. I can turn that down. No problem. Yeah, let me know. And drop some 8s in the chat if you can see my screen as well. If you guys can see my screen and can hear me loud and clear, drop some 8s in the chat for me. Thank you. Awesome, awesome. Thank you. Thank you. 7s, 8s, whichever. Cool, awesome. That's perfect. Cool. All right, guys. So we're going to be going over DXY. And of course, I want to show you guys news this week because we have very, very eventful news event tomorrow. Okay, I'm gonna show you guys if I can pull it up here. Let me see where it's at. For some reason it's not pulling up, but I got you guys. 1 second. Let's see. Let me actually just grab it real quick and so I can show you guys for tomorrow and for the rest of the week, I guess. There it is. So you guys have on the screen as well. Okay, so we have tomorrow. Okay, we have tomorrow. I actually thought today was Wednesday. When there's holidays, my whole week is completely thrown off. I know where that picture went. I deleted it. That's where that went. Because I thought that tomorrow it was Wednesday today. Whenever there's a holiday to kick off the week, like, it throws off my entire week. Like, I don't even know where I'm standing. Because every time I wake up for a holiday, it's like I wake up thinking it's like Wednesday or Tuesday or Monday still. It's always throwing me off. So today or tomorrow, okay, later on this trading session for New York, we will be seeing the federal Jerome Powell testify. Now, I am going to show you guys, we are going to go back and review what he's done in the past, because the last time he spoke, I want you guys to know this. Look, the last time he had to speak was March 8th. Okay, there's always two. I don't know why, but there's always two. Okay, I don't know if you guys can see this. I don't know where that dot came from. Okay, I don't know if you guys can see this here though, but you have the one for tomorrow. Okay, and then you have the one for Thursday. Was it Thursday? Where are you? There we go. We have Thursday again. He speaks twice throughout the week. So we're going to look at every time on the report. It also shows that he speaks one day and then he speaks the following. All right. So we're going to be reviewing on that report starting on June 22nd. Okay. June 22nd. Give me one sec. Okay, so we're going to go to June 22nd here for DXY. But before I do that, I want you guys to know my objectives. Okay, so my objective for the month of June was initially these highs here. Now, I still want to see the highs. I'm not going to lie to you guys. I still want to see the highs. But we are looking like we're just going to head for the lows first. So here's the thing. Is this accumulation took place right here on the weekly. So if we respect this accumulation and start accumulating below these lows, I do anticipate us to go for the highs. But the likelihood is the way that we're trading down, okay, the way that we're trading down this past 3 weeks, okay, have shown a lot of bearishness out of this weekly order block. So for me, I honestly want to see some previous monthly lows get hit beforehand. Now, we don't have to make it all the way down here is the thing, okay? You guys can not... This is the importance of journaling and doing this monthly, weekly, daily is so you understand what you're doing. Because if you're consistently getting this bias incorrect on the higher time frame, you're going to be even more lost on the smaller time frames. Finding clarity on the higher time frames is what's truly taught me consistency in trading, okay? Yeah, Jerome Powell has some things to say for sure. I'm for sure going to be there. So, anyways, what I was mentioning though is these objectives are going to paint a lot of clarity, because I noticed that there's a reality that you have to accept as a trader is if you don't learn to hang on to your winners, you will not be able to afford your losers. Okay, write that reality down, because that's the truth. If you do not learn to hang on to your winners, you will not be able to afford for your losers. All right, so you got to be able to charge it to the game. But if you don't have leverage enough to charge it to the game and you're constantly getting clapped and then catching a 1 to 3 and then getting clapped like 3 more times, you're going to be at break even for quite a long time. So in between those intraday 1 to 3s, right, those easy trades, in between those, you want to find yourself. I won't say that this happens every month, but what it does, it has for me at least recently. Well, I'll find once or twice a month, I'll find a really big trade. Okay, and throughout that big trade, you're able to leverage all those profits for a little bit more drawdown. So it really helps for me to catch a 1 to 10 for example once a month, and then if I lose, you know, 3 trades in between each winner, that's fine. 3 or 4 trades between each winner, it doesn't matter, because I already have a winner that subsides the smaller. And so what these higher time frames also build is confidence. If you're able to hang on to a winner for a little bit more, for just a little bit longer, for your final take profit, for your final objective, if you're able to find confluence in a higher time frame, you will be able to find a lot more ease when trading the smaller time frames. Okay, so monthly objective, even if I'm incorrect, I'm going to be looking for the downside. Now guys, that doesn't mean you always have to look for highs and lows. Okay, when it comes to the monthly, I will sometimes go for previous areas that have already been taken. Okay, so this area here at 101,500 gets my attention for the shorts. Okay, we have another 9 days in June. All right, another 9 days. We may or may not have set the low. May or may not have set the low. We don't know. But June can come back next week, sweep that one, and then continue to go in July. We don't know what's going to happen, but for now, for the month, for the current month that we're at, you have to have, if you're looking for shorts, where are we shorting down to? Okay, so here on the monthly, I'm looking at 101,500 for the DXY. Okay, on a weekly perspective, I am looking for previous weekly low. We did take out this previous weekly low, which was internal liquidity, but I do believe we still have a little bit more room to continue dropping here. Now, I want to point out one thing here is that we may be finding some resistance here at this institutional level of imbalance. I know we have a bullish imbalance here, so I wouldn't be surprised if that's the area that really takes us down to previous weekly low. I'm pretty sure I had this low marked out, actually. It might be on the daily. No, it's not. Okay, so that previous weekly low overall gets my attention, and this previous area of accumulation, of course. So now, if we find some distribution here, I would love to see some more shorts to the downside. Okay. Here on the daily, we are respecting this bearish imbalance here. We did tap into that imbalance here on the weekly, which is nice. So we want to see if price action, and you can even redefine it a little bit more. So if that weekly is a little bit too big, you can redefine it here a lot more on the daily. I don't always redefine it, but you guys can see that a lot more clean right there. That daily insufficiency, when things line up like that, I like to redefine my areas, and you can see that lined up very nicely. So me personally, I will be looking for price action because we did respect the high of this imbalance overall with the bodies. I will be looking for price action to start shorting off for the week. So I am pretty short for the remainder of the week. We can go up one more time. Okay, so I want to now identify the range. The range that we're trading is within this high that took into this imbalance and this low that traded into this previous weekly low. Okay, so we're looking at that range right there. And so if we're looking at that range like that, you know, you 50% and above has yet to be reached or sought out for. Now, one thing I will tell you guys, not always will we make it to 50%. It's not always a guaranteed. It's just the highest probable scenario for us as a trader to rely on a 50% or above a premium price delivery for shorts. Doesn't have to happen all the time. Okay, so I'll show you guys how I do that when I find a very large range. Okay, so now one thing I will tell you guys is price action has been accumulating and respecting these higher highs and higher lows. So if we do climb up higher, if we do climb up higher, you look 50% and above. Okay, so if we do climb up, this high right here is a potential target, but if we continue being bullish, to me, this isn't what's going to stop and turn price action around. Okay. If price action continues to climb up, we're going to be looking at 50% and above. So if price action creates a high up here, 50% and above, then that high becomes my internal liquidity, and we no longer have to come up here. If price fails to create a high here above 50% and just climbs up very aggressively back to this insufficiency here, this previous area of distribution, I would not be surprised, because this equal highs or this internal liquidity is the only internal liquidity within this range currently. Okay, so big news impact tomorrow, lots of liquidity to the upside. There hasn't been a liquidity run within this range as of yet. So all we have so far is this weekly insufficiency here, or I mean this daily insufficiency that may be triggering or giving us a selling scenario. Okay, because we haven't looked and taken out internal liquidity, I kind of have a feeling that we may be able to get the shorts without coming back to 50% of this range. Excuse me. So let's look here. Actually, I want to see what happened within this range before we came back. Yeah, we didn't come back to 50% over here either. So just kind of looking at the same scenario previously that happened here. Okay, you can see it here as well. We come into this imbalance here, okay, and to this bullish insufficiency here. Okay, and kind of looking for that similar scenario to kind of happen here. Okay, so we'll see what happens for Jerome Powell, but we don't have to just kind of like guess what's going to happen tomorrow. You can actually go back, test all this information. Okay, so we're going to go back and look at Jerome Powell for June 22nd, 2022 and June 23rd. Yeah, I believe it's June 22nd. And give me 1 second. Yeah. Okay, Forex Factor. 1 sec. Let me just pull this up. Okay, it was. Oh wow, he hasn't spoken in a while. See, these rarely happen. So this is what I want to show you guys. I remember these very like clearly because they don't happen very often. Okay, so this was June 22nd and 23rd of 2022. Okay, June 22nd and 23rd of 2022. All right, just so you guys have an idea of how long ago this guy hasn't spoken. June 22nd of 2022. This is Jesus. This guy hasn't spoken in a while. That's not the last time he's spoken. The last time he spoke was June, I guess that's tomorrow. March 8th and March 7th. So we'll go to those. We're just starting at the little bit further back just to back test. But we're going to start it with June 22nd to 23rd. And then the next time he spoke wasn't until March 7th or testified. So these don't come very often. We're in June now. And here's that June 23rd, June 22nd and 23rd. Nothing too crazy here. As you guys can see, June 22nd and 23rd, no crazy ass erratic movements. Just kind of ones that followed after. Okay, let's go now to March 7th and 8th of this year. Okay, and with our current market environments. March, was it 7th and 8th? 7th, here's the 7th. Okay, so there's that first news impact, 7th right there. And the reason that you guys can kind of guess that this one had a way bigger impact than the one last year is because our current economy conditions, the recession, inflation, interest rates, everything. So anything that this guy is saying right now is having a huge impact on the market. So okay, so now we're going to look at what indices did on March 7th. Okay, so that way you guys can have an idea as well as myself. Here's indices. Big short. Big short. And you guys can kind of, let's go more to like that time. Okay. March 7th. Just a slight retracement. Or no, not even that. I mean, we got an imbalance, a fill of an imbalance here. And then we just shorted super hard. Okay. I don't know what dictates the directional bias of what Jerome Powell says. I think you have to follow fundamentals a lot deeper than that, which I don't do. I keep up with as to what news does, when news is, but the market will truly show us tomorrow what it would like to do more. Oh, okay. I was looking at it. I was like, why does it look so weird? Okay, sorry. I had my settings turned on a little bit different. So here it is. There it is. We kind of flatlined for a little bit, right? And then we just came back for this imbalance, dropped at the open. So by the open, you know, tomorrow you'll know by the open which direction the market is going to decide to go towards. You know, the open is going to give you more than likely going to give you a good directional bias, if not a liquidity run, and then it's going to continue going in that direction for the news. So the setup looks pretty clear if it's highly volatile. Doesn't look like we're just going to spike the high and like run everything too aggressively. So that's a really good way. Overlapping imbalance is crazy. Yeah, the overlapping imbalance is a crazy concept, bro. I'm glad that you've been paying attention to that, because lately, if there's one thing of 2023 that I love, is when I started to realize and learn about the overlapping insufficiencies. Okay, it's crazy powerful concept. Okay, so check this out. Kind of giving you guys like an idea. Well, actually, anyways, let's not get sidetracked. Okay, so DXY. Let's go back to the weekly. Okay, so now looking at DXY for some shorts. You know, on a daily perspective, we could pump up. Like tomorrow could be the thing that pumps price action to the upside. Tomorrow could be the thing that really drops price action. Depending on what he says, we'll either see a candle that looks like this or a candle in the opposite direction that looks like the opposite. Yeah. So we'll see what ends up happening. We are, like I said, we did come into this previous area of accumulation. This is the failure to create a new low. This is a mitigation candle. We have came into this area pretty nicely. We could pump to the upside. Like I'm not negating that fact, but for overall, like the structure is showing bearishness. So I'm gonna stick with the bearishness. And let's say this is you yourself, and you're starting to journal, and you say bearish as well. And then what I would tell you is tomorrow when you're trading, only looking for shorts and to side with the shorts, because whether you're incorrect, let's say like we end up longing super hard, you're gonna learn a lot more by sticking through with your bias than you would with going short, or is it long, or is it short, or is it long. Like you will learn so much more if you just stick with one and then come back and learn what you did from what you did. I promise you guys, like that's probably one of the biggest gems I could give you guys today. Stick to your bias, not somebody else's, not Joey down the street, not Mo, not whoever you guys are watching for streams, or whoever you're trading aside. Like I promise you, stick to your bias no matter what else anybody says, and that will teach you way more than any other strategy or system. Okay, so as I'm going to continue the week, I'm going to continue with this bearishness. Again, I'm going to be looking for that overlapping insufficiency to kind of be respected here, and then continue running to the downside. If we sweep previous daily low, cool, like we can come into this area, previous area of distribution, and then just continue moving to the downside. We can create some Asian highs and then sweep that instead and continue moving to the downside. I'm not sure what's really going to be the decider of what's going to come back and sweep these lows, but that's pretty much what I'm looking at. Previous daily low for immediate daily target and objective. Okay, with some intraday liquidity. So I would really love to see some highs here created, and then either that taken out, or if we just climb up here and take previous daily high and then go down. But my bias is short. Now, I don't want you guys to just marry whatever bias I'm throwing out here. I want you guys to definitely come up with your own bias and align it, whether it's the same thing or it's different. Okay, I always tell that to my students. Just a reminder, like, just do it yourself, because that's what you're going to learn the most. So actually, sorry guys, I always forget to do this, and sometimes I forget to mention what time frame I'm on. So I'm going to turn this watermark on. Okay, so as we look at these insufficiencies here for the 1 hour, I'm really liking the shorts. Seeing if this, I don't know if this is the high of the week. Can't say it for sure. You know, as I progress, I'll definitely get better at that. But we're fairly close to 50%. So if we do get to 50%, I would not be surprised. But overall, the shorts look more than okay from here. Okay. So let's go into Dow Jones. My monthly objective is that high right there for Dow Jones. We have yet to achieve it. You guys can kind of see it a lot better right here. Not just that, but like you guys can see the gaps that we have back here. So I really like that. I would really love to see these gaps getting filled over here to the left. Now, some people may say like switch, you know, these are the futures. There's a lot of gaps and all that. Yes, there is gaps, but just because it's futures doesn't mean invalidate these gaps. Okay, these gaps, look, like these gaps are no coincidence. Look at that fat ass gap right there. What did we come down to? You can't tell me these gaps aren't useful data. Okay, there's a fat ass gap right here, right? And if you even look closer, there's a nice gap right here that even overlaps that front one, and it's resting right above our high. So just kind of looking at price action, you can see like we've been dodging the lows. Okay, we have not came back for lows since these ones down here, since what is that, May? Yeah, this was the low of May, and we have not looked back since. Okay, so I'm not expecting any of these to come back and get taken. Now, what I will though anticipate is potentially some like coming back for some gaps for some more support. Okay, we did push down pretty hard for the start of the week. Okay, very aggressive. Monday was a holiday. I didn't take any trades, but I know my boy's holding some trades from up here after we took out these highs. Very, very nice. But overall, for Dow Jones, let's go back to the weekly. For the weekly for me, sorry, I kind of skipped the weekly. Just went from the monthly to the daily. So the monthly there. Okay, so that I like to label these by what highs they are. And this is the high of January. And it's 2023. Okay, just kind of give me like an alert, because then you can have these alerts and they really help you when those get tapped. Okay, Then you have the daily. Okay, on the daily, I was looking for this short into this area. I still can see that we can come back into this. It doesn't necessarily invalidate any of this. I still see these lows. You can see how this gap got traded down into last week, creating the low of the week. Okay, and we kind of left that intact. So then we pushed up, swept previous daily high, which was Friday, and then pushed, just kind of melted down since Monday. How we set the low of the week? When you want to see the low of the week, you want to find a strong level of support. Did we hit the low of the week? This could very much be the low of the week. Guys, we've been dodging all the lows. Okay, look at that. Dodge, 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 dodge. Okay, then coming to the daily. Dodge, like hit, dodge, 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 hit, dodge, dodge, dodge. Okay. Oh, I guess this one hit one. One. Yeah. Yeah, I'm more saying that we can definitely just go from here. One thing that I would check is divergence. So let's kind of look at the divergence between these guys. So let's look at how this guy's doing here. To the lows, anchor it to the lows. Okay, and put these guys away. Okay, maybe we can go look at the 4-hour for a lot better price action. Okay, here we have this low and this low, a nice push up on both, this low and this low, a nice push up on both. And then price action has been climbing on NAS, and then on Dow we're kind of seeing this flat line, but no major divergence or anything. Everything seems to be very much the same. Now NASDAQ is missing, like, oh, this is my other contract, that's why. Give me 1 second. These guys are done. I need to add the next month for not June. I'm looking for September. Give me 1 second. What is this? Did I open Dow Jones? No, I didn't. This is NASDAQ. Okay, cool. Okay, so here we go. So NASDAQ and Dow Jones look very similar right now. Okay, not major divergence. Lows and lows right here, both intact and about the same. Okay, then we have a nice high, right? We take out the highs and we push lower, and you guys can see that the major divergence that we currently have is that Dow hasn't created a high and NASDAQ has, but besides that, nothing else. The lows are all pretty much the same. Yep, the lows are lower and everything's kind of matching up pretty well there. So no major divergence there on indices. So you for me, this whole range needs liquidity. Okay, this is the way I view things all the time. This is how my mind is just wired. Okay, the range needs liquidity. The only liquidity 50% and below is this low right here and this low that we already took out. Okay, now according to the internal liquidity rules, we can continue moving to the upside here without having to take out any more lows. So with that said, we don't have to come down this low, we don't have to come down this low, but I am bringing my attention here, okay, in case we do decide to make our way back down if DXY decides to make its way back up. Okay, so with that given, we'll let price action kind of develop closer to tomorrow, but overall I'm be looking for longs below Asian low or below previous daily low. Okay, these very relative previous daily lows. Okay, those are the 2 points in which I'm going to be looking for longs on Dow. Okay, unless I let you guys know otherwise on Twitter, that's my objectives. Okay, daily, weekly, everything. And then of course for a daily objective, I'm going to be shooting for previous daily highs and the high of January, which is at 34,900. Look how beautiful that number is. 34,900 even. Price action, beautiful. I love it. Cool. So that's what I'm gonna be looking for, guys, in terms of in terms of Dow Jones and DXY. Do you guys have any questions so far? Any comments? Any observations? Anything that I've marked up so far that's brought you like, like what is that? I'm glad to explain anything. Today's the day for you guys to ask questions for sure. I have definitely lots of time to be on for our stream today. Unlike last time where I had to cut it super short last week. It's embarrassing. I made sure I have time today. Spencer's asked, what is the lowest time frame you would go from the 4-hour point of interest? It just depends if you're talking about pro trend or counter trend. If it's pro trend, yeah, if we're talking about pro trend, 4-hour to 15-minute, 5-minute is fine. But if you're looking at like counter trending, I would wait for a little bit more confirmation. From the 4-hour, I would need like a 15-minute for sure or higher. Definitely adding to confirmation. Yes. Everything's getting clear so far. Awesome. Thank you guys for the feedback. Okay, so moving on to I guess to what happened previously. So I should have covered that, but this morning I was looking for price action to go long into this area right here. Nice and unmitigated area. Guys, two things can happen tomorrow. We're either going to go long from here into that unmitigated area or come into that mitigated area and go short from there. But okay, I'm going to stick with my long bias for indices. Okay, and that area right there, that super unmitigated area is going to be a major, I'm going to be majorly, I'm going to make sure that myself, okay, I'm going to be majorly partialed out by the time I get there. Okay, I also want to remind you that this is a fat ass insufficiency right here. Okay, not that one. Right there. That's a fat ass imbalance. You guys can see the daily a little bit more clear here. Okay, that's a fat ass imbalance all within that area. So you got a daily imbalance, you got an unmitigated area right there, you got a previous daily high, so you got quite a bit of resistance right here. So if I do catch the long beyond this point, it will not go that heavily. All right, I will more than likely be out by the time we get here to this high. Just making it very clear. Okay, have you ever noticed correlations between DXY and SPY? I'm currently trading options on SPY. Yeah, bro. SPY is SPX. So if you guys trade options, that's an awesome way to. That's awesome. I personally have a Fidelity account that I do trade options with. I trade only two things, and it's NASDAQ and SPX, but they have different names. It's called like SPY and QQQQ or QQQ. Yeah, but I promise you guys, this is exactly the same as NASDAQ. Like this was when I started trading it, and I'm in longs from here, and it's different. I swing trade with options. It's a little bit different, but this is NASDAQ. It's literally the exact same fucking thing. Yeah. So I literally study the exact same things, but trade it in multiple ways. You capitalize on what you do in multiple ways, right? Like we capitalize on the things that we do in multiple ways. You can follow one thing and do it in multiple ways. Okay. So that's awesome, bro. I'm glad that yeah. So DXY and SPY correlate together very much. Sometimes I see a huge imbalance and I want to buy. What confirmations do you need for longs? Example, today Nas longs, I got clapped. What confirmations do you need for longs? I guess the same confirmations that you need for shorts. It doesn't really change. It just matters whether you're pro trend or counter trend. Whether you're pro trend or counter trend, that matters a lot. So moving over to NASDAQ, and then I'll give you more examples as I break that down. Yep. Yeah, I'll give you more examples here as I break this down. But the way that we're melting down, guys, I'm telling you, that I wouldn't be surprised if we get some lows again. Okay, just like we did last week. I would not be surprised. All right. And before I will get to all your questions, Spencer, especially the one that you just recently asked about the Nas longs. We're going into NASDAQ right now, so we'll definitely dive into that, especially as I get into today's price action. So Mohammed said, something that confuses me a bit, bro, is that ICT set imbalances price range, such as Dow on daily, the fair value gap that you showed. It should be balanced, right? Correct me if I'm wrong. I'm not sure what ICT says in terms of this daily imbalance or this one right here. So this daily imbalance, if we're talking about this one right here, this daily imbalance isn't balanced yet. Okay, price action that has been traded through isn't balanced price action. Okay, price action that has been traded through isn't balanced price action. If we were to trade through it again, we could even like do something like this where we like use it as support. Okay, so let's see. Luis says, I've been giving oh nice, different options. Cool. Yeah, of course, brother. Yeah, DXY has a big influence on a lot of assets. So if you're trading US stocks or anything like that, just look at the DXY and you'll find the correlation. So let's see. Recent one, if you gave us a single candle down, throw the fair value gap, it should be considered balanced. Yeah, I honestly would have to review that myself for me to validate anything like that, brother. For now, for the time being, the teachings that I understand from him is that even though we've traded through price action, it does not make that price balanced. Especially for me, if I see price action, I see a fat ass imbalance right here, like you guys see right here, and then you see one fat ass candle just trade right through it. To me, that's not very balanced, because then we now have this big ass imbalance in it. So yeah, I don't know. I'll review it myself and then I'll get back to you on that for sure. But give me 1 second. This isn't showing a candle here, or am I mistaken? What is this? Is this a weekly? 4 hour? 1 second. For some reason, I'm not seeing this high right here, this candle drop. Where's that candle there? I see the high here, but I don't see the candle here. Oh, that's the 4 hour. Give me 1 second. Just trying to figure this out. This is just one fat ass candle. Monday. Oh, this is Friday. Oh, that's why that was throwing me off. Then you have Monday. Then you have, yeah, Monday. Then you have Tuesday. But it shows just as one big ass candle. That's super weird. I'm definitely going to. Give me 1 second, guys. I talked to the guy, the creator of this indicator, quite a few times. He's a great creator. And honestly, if you guys ever find bugs in it, just message him about it. I'm gonna take a screenshot there. I'm gonna message him about it. And Yeah, I'm pretty sure he'll get to the bottom of it because this one's missing a candle. This is missing a candle. Yeah, it's missing that daily candle. It's super weird. Oh, the market didn't open at all Monday? That's interesting. Yeah. Anyways, guys, sorry, it's got super sidetracked. Let's go back to NASDAQ. Okay, let's look at NASDAQ on a monthly perspective and assess from there. To look at NASDAQ on a monthly, I will have to go to the continuous future. Okay. I will have to go to the continuous future, and you guys can see that we have been traded into a previous area of distribution. Okay. One that shifted market structure for quite a long time and set the low of 2022. Okay. And of course, the low of 2023. So with that, we have been trading into this insufficiency here, triple top, that have been taken out. On a weekly perspective, we can go back to the NASDAQ here. On a monthly perspective, you know what? Honestly, I could see this continuing to pump, but I need more data. For the time being, for the month of June, for me, on NASDAQ, I need more data when it comes to long term. I need more data. So on the monthly, I am just going to leave it as it is and go about it on a more week-to-week perspective. If you ever feel stuck, like you need more data, it's cool. Like you don't need to know every direction of bias of every single day of, you know, it doesn't work like that. It's not clear, crispy clear every single day. And it's cool when you can acknowledge when you need more data. So with that, I will just say focus on what you can understand. Okay. And if you ever need more data, there's no shame in that. You can call it a day or have a little bit shorter term perspective. So I can't have a monthly perspective, but I'm looking at this as a weekly perspective. Previous weekly high seems very likely to me. Okay. On a daily perspective, we did take out Friday's low. Okay. We did take out Friday's low there. You guys can see. But I want to see that previous weekly high get taken out. You know, I don't know if we want to create any more downside liquidity. We have quite a bit. Okay. The area that really gets my attention for NASDAQ, so on a weekly perspective, this longs, but on a daily perspective, I was looking at this insufficiency. Now, I know that we don't necessarily have to go that low for me to find a good long position, but that area just kind of got the most of my attention in terms of the shorts. Okay, so we came into this previous area of accumulation. I'm gonna mark out this gap right here. It's a daily gap. I want to see what happens there. Okay, and so right now you have previous daily high, and this range is quite large. You guys can see here, quite large on a daily perspective. We have a fat ass gap down here, but we have quite a bit of insufficiency all the way down. Very large range. I'm not anticipating this range to, you know, at all for us to come back down here. If I'm looking for anything, it may be premium and then 50% of premium range, which we did come back down to. So just kind of half in that area. You guys can see here a little bit better. Looking at this is that whole premium range, and when we just cut that premium range in half, and then you get this range right here. So now looking at this range, we already came 50% or below. Okay. One thing I will tell you guys, there is I believe, let's look at Dow Jones real quick. Okay, there's Dow Jones, and we're gonna pin it to the highs. Okay, you guys can kind of see Dow Jones a little bit better down there. Okay, in terms of NASDAQ, here's the first high right here, and then from there NASDAQ respected the highs as Dow Jones created a higher high, a new high. Then Nasdaq created that low and then created a lower high. Okay, as Dow Jones also created a lower high. So honestly, let's see Dow Jones here on a candle chart. Yeah, honestly, I could see Nasdaq that did create a high having more strength than Dow Jones. We failed to take out any liquidity here too. So honestly, on Nasdaq, that high right there, they're both relatively close. So just looking at that high in there for potential longs, and then really 50% and below has been achieved. We could potentially come back for it one more time. We don't have to, honestly, to continue to go long from this area. Okay, so we have this opening gap. We could trade, we have this imbalance here as well, so we could trade down there below Asian low and continue going long. For me, Nasdaq longs seem the highest probable ones. You guys have seen how Nasdaq's been lately. It's been on a run. Okay, so looking at previous daily highs, but overall previous weekly high is the main objective. Again, we've already traded to 50% of the premium range. We don't have to go any lower than this in terms of premium. So this low right here could very much be the low of the week. Okay, this imbalance here does get my attention quite a bit, so we'll mark that one out. Okay, and then yeah, we'll continue to watch price action develop for tomorrow. Nasdaq though, reviewing what happened earlier today. Okay, so one thing I'll tell you guys, okay, the open, I don't trade it, but they do provide nice scalps. Okay, if you just look right here, like you have your Asian high, okay, then you have a nice 15-minute imbalance with another 15-minute imbalance behind it, overlapping it. Okay, and you guys can see just how clean we just explode to the upside from there. Okay, stop loss below the low of the imbalance. Take profit being Asian highs. Okay, nice 1 to 4 right at the open. Again, the open price action delivers nice scalping models. Okay, but I don't ever really trust that it's always going to provide like the move of the day that I'm going to hold for the remainder of the day. Now, when we did take out the short, now this is a nice push to the upside, but really what you have to realize is this. Once this happens, you got to ask yourself, how does the 1 hour look? Okay, because after sweeping liquidity, if you get a nice rejection, you have a nice imbalances here on the 1 hour as well. We're going to mark those out, which is this low right here as well. Okay, price action dips down there. We dip down there. Okay, very, very nicely. We dip down there. And that's where we end up longing from initially. But now we're coming back down. So you guys look at this. Okay, we've already pushed down once into it. Now we're coming back down after taking out major highs. Okay, looking at all this liquidity. And what is this, Monday? Here's the new week opening gap. Look at that. Oh my gosh. The fucking accuracy. Okay, there's the new week opening gap. I love to see things line up like that. Okay, and then the way that we rejected from that area coming down after taking out the Asian lows just kind of comes to show you like this whole range. If you were targeting the shorts, you can take out this internal liquidity. But for the most part, you can see that all of this is very balanced. Okay, traded through, traded through, traded through. Some very relative and easy lows to get taken out. And then the way that we're trading downwards, okay, on the 1 hour, then you can also revise on the 4 hour. Okay, I always like to just look at the higher time frame before just looking at the lower time frames. Give me 1 second. I was kind of tripping, wasn't it? Give it just 1 sec. There it is. Okay, and then you can just realize like the 4 hour here. Okay, you can realize the 4 hour here respecting in that area overall. You can see where it actually came up to that unmitigated area. Really what would have been very nice if we came back up here, but we did not. Just took out that high, traded into this area. Now I did not know where we were gonna stop. Okay, we can just mark out our Asian highs, new weekly opening gap, previous daily high. Okay, then we end up pushing to the downside. Now a lot of individuals may have been gotten caught up on this long here. Okay, and one way I will tell you guys that you can avoid that is wait for internal liquidity to be taken into this imbalance, and then once price action gets in there, allow price action to just develop. Okay, you get a rejection, but overall you have to just kind of ask yourself, like, where are we trading towards? You have this distribution above the highs taking place. Okay, you have this insufficiency getting filled here on the 5. Okay, and probably on the 15-minute, to be honest with you. Nope, just on the 5. Okay, getting filled. Okay, and then you have all this downside liquidity. You have equal bottoms, and you have these, and you can kind of see in the smaller time frames. In the smaller time frames, you also kind of want to see imbalances in there. Within your imbalances, you want to see smaller time frame imbalances. The ideal imbalance will have imbalances within there, not this back and forth shit, because that's very healthy price action. Okay, so now again, let's say like you went long right there and it clapped you out after it comes back here. Okay, at this point you have to realize, like, the longs, even if they looked attractive on the 1 hour, you have to ask yourself, in terms of liquidity, why would price action sweep internal liquidity and then continue pushing to the downside? And that's where you have to realize, okay, this isn't internal liquidity. Any previous lows before, as we if we're bullish, any previous lows is internal liquidity. Okay, so we may be going for this low here. Okay, which is what we ended up taking out for the day in terms of the shorts. But for the most part, like, if you get clapped, it cannot be the end of the day. It cannot be the end of the world. Because one thing I'll tell you guys, 1 second. Okay. All right. So, one thing I will tell you guys is the market always seeks out liquidity. Okay, so in terms of liquidity here, even if you get clapped once on the long because that price action looked attractive and everything, I couldn't agree more, right? Even if you get clapped out once, there was zero evidence to continue throwing more money at the market. Zero evidence to continue throwing money at the market. So even if you guys do get clapped on these longs, that's totally fine. I could see why some may have gotten clapped, especially giving the initial reaction. But just remember, the open will always give out this initial reaction to entice traders to jump back into the market, to then throw it against them afterwards. Okay, so how is your chart set up right now? I see that the candles on the left and then the candles on the right. Is that an indicator? Yes, it is the power of 3 indicator. Okay, power of 3 indicator by 2 degrees. You guys can go to his Twitter. It's spelled the exact same way, 2 degrees with 2 O's instead of the TWO, the number 2. It's TOO degrees. Okay, you guys can follow him on Twitter, and then that way is the only way to get access to his tool. Sorry, I'm like putting up an extra one. Anyways, Mohammed said it's better to use a new week opening gap from Tuesday when Monday is a U.S. bank holiday. Awesome, brother. Thank you. I appreciate that feedback. I don't see much of a gap here, but I will use that. I just like any gaps, to be honest with you. If there's gaps, I'll mark it out. It doesn't necessarily have to be the new week opening gap. I follow any gaps, to be honest. It doesn't necessarily always have to be that new week opening gap, though, for sure. Just focusing on gaps overall, especially in price. So now price action comes down here, takes out the low. Okay, you reassess and you're like, okay, clearly this is going to, you say, okay, now we can accumulate from below the lows. Okay, so now once we're coming down, okay, you have the 4 hour that's bearish, the 4 hours bearish, the 1 hour that's bearish. Okay, the only thing that's bullish here is the daily. So the 4 hours bearish, the 1 hour is bearish. You guys can see here the 15 minutes bearish, coming down like a knife. Now you guys gotta see it like this. The market, when it falls down like that, it's a knife. Okay, and so if you try to just jump in front of it and try to catch it, you're gonna get cut. You're gonna get hurt. It's gonna cut you. Okay, you can't just hope that you're gonna catch that knife and it's gonna, you know, start turning around before you catch it. Yeah, don't do that to yourselves. Okay, it's gonna take a little bit more time frame. So on this one, okay, since we are bearish on any other time frame, I would at least need a 5-minute accumulation. So allowing price action to kind of give you that, boom, you get your 5-minute accumulation. Cool. After that, you have this previous area of distribution that could potentially give you a retracement, but right here is where you don't want to just pull it, you want to find an imbalance. Okay, there's your imbalance right there. So once you find your insufficiency, okay, then there you can either go into the lower time frames or just snipe the market from where it's at. You can put your stop loss below the low of the imbalance, or below the low. I honestly don't mind trading below the low of the imbalance. That's just how I trade. But respecting the imbalance is the overall thought process. Okay, then you have another insufficiency there. Okay, you can, if you missed that first one, you could have gone in on that second one. Same thing, stop loss below the low of the imbalance. That kind of leaves room for that second one as well. I really like that. The fact that, this is why I don't think that price that's been, imbalances that have been trading through with one end candle is balanced price action, because look at that. We come right back to it, to the low of that initial imbalance, and you guys can see that we continue pushing to the upside from there. So we have another insufficiency there. Okay, and I'm sure, like I said, price action was accumulating. I don't take 1 minute entries with 1 minute stop losses. I'll take a 1 minute entry with a 5-minute stop loss. Price action accumulates again, throws out yet another imbalance in here, and now it's a little bit higher up. So you may want to get some evidence at this point before going into the market. You may need some evidence before diving into the market at this point. Okay, so at this point, maybe it's a little too high for you, so then you wait, okay, for your price action to start accumulating. And you kind of want to see price action take out this high right here before you can reassess and say that's bullish. Okay, now that we created this new low, you kind of want price action to take out that high first. Let's go to the 3-minute. Yep, previous area of accumulation. 1 minute, just kind of letting price action do its thing. Now that it took out this high right here, that has created a new lower low. That right there, once it creates an imbalance, I'm going to look at that. It has now created an imbalance. Not only that, it has created an imbalance, it's created a breaker right there. Okay, so now I'm going to overlap my breaker imbalance and everything. That's going to be the entry, stop loss below the low. That has created and swept that previous low. That created that imbalance. targeting that same insufficiency. Okay. And mind you, I haven't backtested in NASDAQ. Like, I haven't even looked at this shit after this morning. So I didn't even know that's how it played out. I can just honestly tell you that's exactly what I follow every single time, every single day of of my trading career. Is that steps is like, I just wait for price action to show me that it wants to do what it wants to do. You know what I mean? It's like, I can't just take a trade. I have to allow price action to show me that it wants to go in my direction, because otherwise you're just gambling. You know what I mean? Waiting for that extra evidence is always key, especially like if you feel like you're chasing price. You probably are. Hey, wake up call. If you feel like you're chasing price, you probably are. You don't always necessarily have to get price right at 5 minutes imbalance once it's fucking high up there. Like, you can wait for more evidence to develop within these areas to do the exact same thing. I don't show you guys that too often, because I don't want you guys to get buried into the smaller time frames on every single fucking setup. But does it help? Yes, it does. Do you need it to become profitable? No, you do not. Oh, damn. Let me read the comments real quick. So once we swept the lows, we would look for buys on NAS, right? What is the lowest time frame you would do? Oh, I already answered that. I said the 5 minute. So yeah, the 5 minute is the lowest time frame that I would look for in terms of those longs against the 4 hour, 1 hour. At least a 5 minute. If you have a very valid point of interest, then yeah, at least a 5 minute. Okay. Bro, would you add on a second one already if the first one is in profit? If the first one is in profit, yes, I would add a second one. Yeah, hell yeah. Guys, the thing is like, you have to trust yourself. Once you have to realize, the higher in the range price action or your entry is, the more room you got to leave your stop. Okay. So, for example, in this area, in this scenario, like the lowest point that my stop loss would be is this point right here, right? The moment that new imbalance is created, right there. Okay, and then I wouldn't be able to move my area anymore until, give me 1 second, until we have created another high with another insufficiency, and then that low will become my area with my stop loss. Because that low has created this insufficiency, my new area of support for price. Okay, and that's when I move my stop losses. So essentially, even if you got a re-entry in there, you may not even be break even. It's the risk of it. I trade that way. You guys don't have to trade that way. I just don't go break even that easily. I've learned to trust myself more and to build a system that I trust a little bit more than that. Okay. Price action, you guys can see just kind of playing around with that new week opening gap, and I believe it was I think that's where we're at now, is that imbalance. So looking at price action, guys, we have our goals set. We have reviewed price action previously. We have a nice game plan for tomorrow. Okay, nothing set in stone. I will definitely keep you guys updated on Twitter first. Okay. For anybody on my 6-month mentorship, I'll see you guys tomorrow during the news event. I'll definitely tune in with you guys there. And for anybody that's not in the 6-month program and you'd like to learn more about it, I highly encourage you to go to the description down below and you will see my link and inquire about my 6-month mentorship. Okay, then we'll set up a free consultation between you and I and see if you qualify. And guys, I don't just have the 6-month mentorship. I have different mentorships. So you may not qualify for the 6th month, but there may be other options for you that better suit where you're at in your trading career. Okay. So with that, guys, I am going to let you guys go. It has been an amazing Technical Tuesday session. Okay. I appreciate you guys for tuning in. I appreciate you guys for being here day after day, week after week. We're growing as a community. We're growing as individuals. We're growing as traders. Not just that. So I want to tell you guys now, on Mondays, I want to give you guys this in advance. This heads up on Mondays for our New York trading live session. On Mondays, we will be starting about 15 minutes early. So I will be going live about 9 a.m. Eastern time. and we're gonna start a meditation session for 15 minutes. If you guys would like to tune in, I highly encourage you to do so. Excuse me. Well, I just started choking out of nowhere. It will be a guided meditation that I will be putting on. I will be either doing it with you guys or be guiding you through the meditation. But yeah, guys, that's what we'll start doing as a community. I want to make sure that you guys are building this peace of mind. I want to hold you guys accountable to meditation, and for holding me accountable to meditate, guys, because honestly, if you do not have 5 minutes a day to put down your mind and shut it off, then you need at least 7. Okay, you need to pump up those numbers. I'm not meditating by any means every day, nor can I ask you guys to do that if I'm not willing to do that myself, but at least implicate it into your weekly routine. So with that, guys, take care. Have an amazing rest of your week. I will catch you guys on the recordings, and I will catch you guys in Twitter, okay? See you on Thursday, and see you tomorrow for Abundant Capital's New York live stream, all right? Take care, guys. Peace. And yes, every Monday I go live on YouTube, on this YouTube page, on the same one that you guys are at. I go live every Monday for New York session at 9 a.m. Eastern time. Okay, every Monday, 9 a.m. Eastern time. All right, see you guys there.